is it that we're headed in the medium and long term, and is there any visibility on that? Let's welcome on board Punita Kumar Sinha and ask her exactly that. Punita, hi, morning. Great to have you on the show as always. Punita, we started off the year with becoming this anti-AI trade. Has that perception or that trade flipped now, given and what's happening in South Korea with regards to SK Hynix? And sporadically, even in NASDAQ, you keep seeing some of those semicon and, AI-related stocks do crack quite a fair bit.
Yeah, I think the realization, the hype is now setting into reality check, because there was a lot of hype on the AI trade, and that was basically hurting India, because all the foreign investors amongst the emerging market investors were really, putting money into Taiwan and Korea. India, obviously being seen as a laggard on the AI side, wasn't getting the attention. But now there's been a reality check, and as to, can the companies really support the capex that is needed, and is the return on this capex going to be in line with what the valuations are, or have valuations run ahead of themselves? And I think finally, also the fact that China is really coming up with models at a much more lower cost than the US companies are doing. And so the capex that the US companies are doing, that itself is questionable as to the returns on that, and whether there is enough capital to even support all the demand. So I think all of those are causing concern on the valuations. And this reversal of the AI trade, in which India was seen sort of as a laggard and a defensive market, is now getting the attention back, because we have a lot of companies that are generating growth outside of the AI trade, as we've seen in the results of some of the companies. And I think so that some of this foreign investor money should be coming back into India.
And where, Punita, do you think the money is going to find its way? Is it going to be bottom-up stories like IT, perhaps, or even some select private banks, also because of, the depth in these sectors? Or would it largely be SMIDs, because that's where you've had outperformance from the March lows?
Well, I mean, definitely, I think it's a broad-based, India is a big, broad market, and you have to be stock specific, but financials, the results are coming out quite good. And so I think the NBFC sector, selectively, you're seeing, good compounders there, because you have 15 to 20% growth numbers coming out in results. So that's one area. Of course, IT, which was really beaten down and seen as like a negative correlation to AI, that's a sector where some money is definitely going to rotate into, given the valuations. And again, reality check that maybe these companies still, their business models are totally not threatened, and they still have potential to, have some work that was earlier being discounted. And then, of course, capex is, India definitely needs to invest a lot more. And so I think anything that is going to have, in the manufacturing capex sector, whether it's in power, whether it's in infra, parts of, real estate, I think all of those you can find opportunities. And then, of course, the traditional companies in the diagnostics, healthcare, the Indian secular trends. I think, of course, there are still some risks in the economy, or facing the economy, with inflation, El Nino, the higher oil prices, impact on currency. So we are not totally out of the woods, but definitely the reversal of the AI trade is going to get some money back from foreign investors.
Clearly, you seem to be of the view that this has overshot itself a little bit, right, Punita? But if you were to be allocating fresh money at this point of time, would India feature on the list, or are there better opportunities globally? Because you're one of the few who can give us that view, with the India tilt and a global perspective?
I mean, I think the biggest worry is that investors, when they allocate to India, is the currency, because whatever returns you make, you lose a lot in the currency. So your hurdle rate has to be a lot higher to invest in India. And I think that, of course, is still at risk with the higher oil prices. Even for instance, and if you look historically, US and India are one of the two best performing markets over like 10, 20 years. So US still has a lot more opportunities. It's a very efficient, productive economy that continues to keep going, innovating. So if you had opportunities to invest in US and India, you'd invest much less in India compared to what you'd invest in the US. But if you're looking at it from an emerging market allocation, then I think within the emerging markets, I think India is now beginning to look attractive relative to what we had seen. Most of the money was going to Korea, Taiwan, and China was also benefiting because of China's definitely been quite a more innovative economy and very efficient allocator of capital. But India definitely features in an emerging market portfolio. I'm not sure how much it'll feature in a global portfolio.
Productivity gains, Punita, where will it reflect the most in terms of sector? Which will be probably the most beneficial in terms of a sector bet?
I mean, we're definitely seeing, particularly in the financial sector, where I'm on a number of different boards, we are definitely seeing productivity gains coming through in the companies by using AI, whether it's AI in customer service, AI in loan applications, AI in fraud monitoring. So a lot of different uses of AI is creating productivity gains. So that's a sector I can definitely talk to. I think definitely wherever AI is being used, there are productivity gains, and people and companies are hiring fewer people. So if, definitely we are seeing those trends. And across industries, we're going to see some productivity gains coming through from AI, whether it's going to result in I think it'll only result maybe in a few percentage point at most on earnings growth right now. So it wouldn't be a big kicker to earnings. It's just, something that is required and you have to keep up with your competitors. And if you don't use AI, then you're going to, even the 20, 30, 50 bips margin improvement that you can get by using AI, if you don't use it, then you lag your peers. So everybody's using it.
Sure, everyone is. But Punita, so great to have you on the show today. Thanks for joining in as always.
Thank you.